Good morning once again, everyone. Thanks so much for being here. I hope everyone is having a good day. Rickster's posting that I think it's Monday too. They're going to reshuffle the weighting of those indexes on the QQQ anyway, and that is going to reduce their impact in the QQQ, but only slightly. Not enough to make a meaningful difference. And that's important because the index is really keyed in on the idea that we can't let these guys lose their weighting, otherwise the index falls. So their weighting to that index is still going to be very, very dominant, even with a readjustment on that. So let's talk about the rounded bottom breakout here. Now, the rounded bottom breakout is Rick's baby. I was trading this pattern. I didn't call it the rounded bottom breakout long before I ever ran into Rick, and Rick had a name for it. And I think it is one of the best productive patterns in the market. But it really comes down to how you manage it, how you enter the trade. Now, I look at it just a little bit differently, and I'll just mention here, right way options. We actually traded a rounded bottom breakout here, entering Mosaic right here, and I ended up closing it yesterday for a 25% profit. Now, normally I would hold longer, but the reason I didn't hold it longer is because of the extension of this market. And I was expecting a pullback to occur at any time, so I wanted to grab those gains and get out of the way. So I don't typically do trades that are so quick, but it just came up here in the market with that extension to be a little bit concerned about that potential pullback. So I've been cautioning for a while to start lightening up on your accounts, to be raising your stop losses, and I've been following that rule myself. As a matter of fact, we're holding, I'm holding a QQQ bear call credit spread that is right now up 21% because of this pullback here in the market that I've been kind of expecting. So the rounded bottom breakout is a fantastic pattern, and it's one that you want to be paying attention to. And I look at it maybe just a little bit differently than Rick does, but it doesn't change the perspective of the pattern. As you guys know, I'm kind of a one-trick pony. Rick was talking about you can kind of just do one thing and get good at that, and that's all you do. That's me. That's my career in trading. I do some very, very simple things, and I repeat them over and over and over. I don't need a lot of trades. I just need the right trades. And the rounded bottom breakout is one of those patterns that produces really good setups. And what I want you to notice in here is this trade in Mosaic. I actually didn't find it as a rounded bottom breakout. I found it as a 3/8 trap long. Okay, and the 3/8 trap works perfectly with the rounded bottom breakout. And gives you support confirmation for that potential trade. Now, one of the key characteristics that I think is really, really important in the rounded bottom breakout is, first off, we have, and I'll show you some charts here. I've got a bunch of them to potentially look at. We have a situation here where a stock gets very pounded down, really oversold. And you'll typically see this orange line here is a 34 exponential moving average. You'll typically see in that real oversold condition that 34 EMA will kind of sag away, put a big old fat belly underneath that 50-day moving average. And then we start to see that basing pattern comes in where everything begins to flatten out here a little bit. and those shorter term moving averages start to turn. Now, I look at, I brought up BTU that was interesting as a potential RBB. It's light on volume, no doubt about that. But it's light on the volume today, but usually it trades pretty good volume. But here's a key component for me in the round of bottom breakout. You'll notice here that we have this pop above and this pullback. And this would be the round of bottom breakout buy. And that might have worked for a really quick kind of trade. But it's not my favorite trade in here because the 50-day moving average is still declining. Okay, notice the difference over there in Mosaic. In Mosaic, after that rest was occurring, we started to get that 50-day moving average flattening out and beginning to turn. That's the rounded bottom breakout I want. Now, if you utilize that with the 3-8 trap strategy, the 3-8 trap helps you see that momentum where the 3 has to stay above the 8 in the trade. If I go to BTU, you'll see that rounded bottom breakout struggled in here with its momentum. Struggled in here with the momentum. So it's not my favorite trade to be looking at unless that 50-day moving average is starting to roll back up, turn back over to the upside. So that's a key component to me. First, I want to see, if you guys want to write this down, for if you care what I say, and you don't have to, but I want to see that big extension to the downside. I want to see that massive separation from the 50-day moving average. Okay, that's that. Think about this emotionally for the market, and so much of trading is emotional. It's how people see things. This is when everyone goes, this is the worst trade in the world. It's never going to be good. It's all bad, and everybody's running for the door to sell it. It's just pounded down and pounded down and pounded down. This is when all of a sudden the institutions start to come into play and say, you know what? It's not so bad. As a matter of fact, it's oversold, and it should be valued higher. Okay, so when you're watching those patterns and think about the psychology, why is that occurring? Bottoming areas down here, this is where institutions are picking up the stock. We like to think, no, the institutions didn't start buying to here. And that's not true. We can't begin to rally in the market until institutions build a position. And patterns like this are those patterns that are the thumbprint of the institution. They're building that position through here. Okay? No. Devin, well, for me anyway, Devin, no crossover is a reason for a trade, period. No indicator is a reason for the trade. None whatsoever. Okay? We try to make it so, everyone wants to make, well, it's just a crossover. That means it's a trade. No, it's not. And that's what I've been saying here all along, right? It's the price that makes the trade. Okay? Crossing up doesn't mean anything to me if the price doesn't show me a potential trade. So when I look at a pattern like this, what do? Finding the trades for me are not about me. There's some questions earlier in Rick's class about, what's the best trade, and is this the most profitable trade, and things like that. There's no such thing as the best trade. Okay? There's no such thing as, in options, I get the question all the time. If you guys know, I'm kind of the options guy here. And people say, what's the best option strategy? The most profitable option strategy. They all have a purpose. Every single one has a purpose. One is not better than the other. So when you're looking at a chart or trade like this, you need to put some perspective into it. We get this idea that we can just put a couple of indicators on a chart and that's always going to produce winning trades. And that is not true. Okay? Not true. What you want to be looking for is the price pattern that provides a high probability of winning. Okay, let's get rid of all the moving averages here for the second and just look at the chart. Why did this chart have an interest to me? Because we have an upside trend. We are respecting the trend. We popped through that resistance and then price rested back and held it as support as we moved to trend. Okay? Had nothing to do with the moving averages. The moving averages help me see the pattern coming. It's not the reason for the trade. The price action is the reason for the trade. And you can see that right here because what I did, and everyone in Right Way Options will tell you that this is the case, I set that price alert before that candle occurred. Okay? Because of trend, because of support, and because of the pattern. Okay? That price alert is what made us successful on this trade. Because after I set that price alert, I don't have to worry about the chart anymore. I wait for that trade to show me when the buyers are stepping up into the trade, and I place that entry. Does that make sense, Devin, and for everyone? And I think this is really, really important. When it comes to profitable trading, it's about the management of the trade that makes the difference. The trade should always be based on the price action of the chart. Indicators should be used to help you see that potential price pattern forming. Make some sense, I hope. So when I'm looking for these price patterns, step number one is I want trend. Proof of trend. Okay? And then I start looking for the price patterns that I trade. Like I said, I'm kind of a one-trick pony. For those folks that don't know this, I'm a trend trader. Either the trend is up or the trend is down. I'm looking for the stock that has already moved up and is pulling back and he's looking for the next entry into the trade. Or it's moving up and it's consolidating over to the trend and he's looking for the next entry into the trade. That's all I do. Okay, I've built a career doing that, and it doesn't require me to gamble. It doesn't require me to predict anything. And that's what I like about these kind of patterns. I don't have to predict this. All I have to do is look at the pattern setting up, set a price alert, and wait and see if it's right. I didn't predict, I didn't anticipate the trade, I waited for it. And it produced a one-day profit of 25%. Okay? So when you're looking at these patterns and looking at these charts, think about how can you put yourself in control. One of the biggest mistakes, show of hands in here, how many times have you guys anticipated the entry of the trade only to lose money on the position? You see the chart, oh, here's the pattern, or here's the crossover, this is going to be a great trade. And you try to make that entry in here someplace, trying to predict it, and then it just moves down. As a matter of fact, what you're going to find, Dwayne, and for anybody out who's had that problem, if you go back and look at your past trades, I can guarantee it's going to come very, very close to these odds. You're going to win half of the trades and lose half of the trades. That's going to be your win-loss ratio for anticipating. You might be within a tiny percentage or two difference on that, but it's going to be 50-50. And the problem is, it's really difficult to make much money with a 50-50 win-loss ratio. So with the rounded bottom breakout, I want to look for that pattern setting up. I want to set a price alert, and I want to wait for that trade to produce. Show me that the buyers are stepping in. And then the next thing I want to look for is I want to look for a low risk stop. Underneath that price pattern, I don't have to risk a lot of money, because if I'm wrong, that pops up and reverses. I don't have to risk a whole lot of money on it. If I have a price pattern in here that's really volatile, and again, this is one of the reasons I like to see that 50-day moving average turning. Okay? And the reason is because when that starts to happen, it starts to calm down. This period over here is very volatile. And the reason it's very volatile is institutions want it that way. They're trying to sneak into the trade before retail gets there. Okay, so when they start to pull, this starts to come back around. Right up here is where they start releasing their short trades. And the stock begins to rally. Now, the other thing I like about this, and this is kind of an important aspect for me as an option trader, is when I get that resting pattern in here, implied volatility of the options that was relatively high in here, implied volatility in this area declines. Okay, so the implied volatility of that option is important. If you guys have ever, doggone it, I'm getting the wrong tool here. If you pay attention, well, you son of a gun. I'll get it here. You watch. I'm persistent. Implied volatility is a very important part to the pricing of your options. Okay. When implied volatility is high over here, you're going to pay more for extrinsic value. That's the time value of the trade. You're going to pay more for that option, and you're going to have a higher theta decay on that as well. Because remember, the real important thing to options is not just the direction of the trade, it's the timing that's important as well. If you don't time your trades correctly, you have a difficult time making money in options, because you get these implied volatility spikes and whips, and people don't even realize that they have paid so much for an option that they have very little chance, or so much for implied volatility, they have very little chance of that trade ever winning. Okay, looks like a perfect setup. Anybody had that trade? Looks like the greatest setup in the world. You jump on the trade and you just don't understand why it's not making money. You even had the direction right, and it's really not making any money. You probably overpaid for the implied volatility or the time value in the trade. So when we get this resting period in here and that 50-day slows down and starts to turn, that implied volatility is declining. When you set a price alert in here and catch this on this move, that pop, implied volatility expands back out. Okay, so you catch that trade in a position right before that implied volatility pops and expands. Implied volatility is the calculation that creates theta, yes. Okay, it's the time value of an option. Theta is the actual depreciation of that time value. Implied volatility is the calculation that puts that time value into the option price. Okay? So when you're looking at these trades, those are some of the things that you might want to consider. If you look at something like NWL that's setting up in a rounded bottom breakout. Well, notice in here we popped and we popped big. And here's another key factor I think that's really important in the rounded bottom breakout. Everybody seems to think that the only way you can make money in the round of bottom breakout is to catch the perfect entry. That's the only way you can make money on the RBB. And I will tell you honestly, I've never found that to be true. For me, sometimes when we pop through the 50, we move really hard and really fast. It's a big emotional move. Sometimes it's the next trade that's the best trade. So here again, there's our trend. Notice this pop, this resting pullback in here. Now you want to be looking for your trade. Could you have picked it up yesterday? Yes. In that trade. Could you be waiting and say, I want to see it pop through there? Perfectly fine. Do not get involved in the idea that I have to get the perfect entry, because the round of bottom breakout in a pattern like this could produce 3, 4, maybe more trades. That could produce nice upside opportunity. You can make the decision, and I often do, where I'll take the trade like this and then I will hold it. So for example, it'll rally, pull back, and it'll rally. It'll rally, and then I sell covered calls against it. It rests and pulls back, and then I close those covered calls for a profit and catch the last part of that rally up toward the 200-day. So I manage that entire position and bring more profit into the trade. Okay, is this making some sense, guys? And if you have any questions on this, please ask, because it's the management of the trade that makes the money. It's not the indicators or anything like that. It's the management of the position that makes money. So when you look at a pattern like that, first thing I want you to look at is notice that the 50-day moving average is turned. Notice that this is a really beat down stock. Okay? Notice that we're holding and providing trend. Notice that we're holding and breaking through support levels and resistance levels in the chart. Okay? And watch for that next potential entry that could be coming and make that trade come to you. Too much chasing is going on in the market. If you guys are feeling all stressed out all day long because you're rushing, always looking for the white candle, rushing, 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 rushing. If you can see this pattern developing before it occurs, you set the price alert and then make the trade come to you. It doesn't require you to be a big emotional mess. It doesn't require you to rush around for the trade. My rules, CJ, for options, if that's what your question was, I will always be, always, you can ask anybody in Right Way Options. I am so stuck to my rules that it's always the same. Okay? Probably frustratingly so for a lot of folks. I'm always going to be somewhere between 70 and 80 deltas for my entry position. And if you want to know why, you can ask. And I'm almost always going to be in a trade where I'm looking for an option that has about 60 days plus that I'm interested in getting into that trade. And the reason is, in a trade like this, if I have a 60-day option, it gives me plenty of time in here. If this is going to rally and then rest and then rally, it gives me plenty of time to carry that trade through to the upside. Okay? That makes sense? When I'm selling covered calls, I never sell a covered call that is not in a position that I'm willing to give the trade up. Okay? I'm willing to let it go, or I won't sell the covered call. And I always sell covered calls, usually somewhere around 30 deltas or less out of the money. So I let the rally occur, then I sell the covered call, and then I let the resting pullback profit on these covered calls If we start back up, I close the covered call, allow the rally to go up, close that for a profit, allow the rally to go up. So it gives you more time to profit from the trade by following along that pattern, because this is a really, really great pattern. Somebody mentioned PayPal. I've been talking about PayPal in the morning market prep for some time now. There is the kind of the textbook perfect round and bottom breakout pattern, but I want you to notice something here pretty important. First off, see that big sell-off belly underneath there? See this trend? See that it tried to go ahead of the trend and it didn't really do anything? Doesn't matter if you took that right there, you just had to be willing to hold. What I find is people look for immediate gratification in a trade and they take this position here, it pulls back, they stop out, or they stop themselves out. They lose money on the trade just before the trade takes off. Okay? One of the reasons that's occurring here, guys, is when it occurs here, that 50-day moving average is still declining. That pop, pull back, and right in here, place your alert someplace, catch that trade. Okay? Notice that those trades tend to occur near trend, near support. And here's the thing, guys, you don't need too many of these trades to make all the money you want to make. You know, it's kind of funny to me because people come to the market every day and they're in a rush to risk their money. Man, I got to hurry up and find it. Got to hurry up, got to hurry up, got to hurry up. There isn't anything that I have described here that requires you to rush or to hurry up. It requires you to look at the pattern setting up, place an alert, and wait and see if it occurs. It puts you in the control of the market, it puts you in control of the trade, and it puts you in control of your emotions. Okay? So think about those trades. Now take a look at a stock like Wish. Wish is in a round of bottom breakout pattern. So we're breaking through this bottoming formation in here. This is that institutional formation that could be forming up in here. Okay, we popped through. Notice our 50-day moving averages started to turn to the upside. Now this little guy doesn't trade much volume, so that would be a reason I would probably throw this out. I'm not normally a tiny stock trader here. If I were to trade this, I would probably trade it with stock, not options, because the implied volatility of something like this in Wish is going to be really high. And so I would probably prefer to just trade the stock on this. But there's that pattern again, and you can see that pattern coming. So right now, if I were watching for this potential trade, if this is something I was interested in, I would literally look at it like this. Am I willing to put a stop loss here? Where would I want my entry to be? Up in here, my alert on it? Am I willing to risk that much in this trade? Now think about on something that's $8 like this. I'm going to move that because it'll be in my way. If I bought it here and my stop loss is here, I'm taking almost a 15% risk to my trade. And that's on the stock. If you trade that with options, 40-50% loss to your stop loss. Okay, so what I would want to occur here if this were to become a trade is I want this pattern to tighten up. And there's time for that. You can see we're still pulling back. We could rest this thing right back into this support right here and then relax a little bit and tighten that pattern up. So wait for the trade. Wait for the right trade that fits you. Okay. Now I'm really a price action guy. It's my thing. I really study price, and these price patterns are all very, very important to me. If you look at HBI here, Haynes, We're in a rounded bottom breakout pattern. Boy, this thing is a mess. Look at this. Pop, pop, all over the place in here. Why is that going on? It's going on because we're still struggling with all of this resistance zone over here in the chart. We're trying to decide, do we have enough energy to push through that area? Notice we're just now starting to round that 50-day moving average over. Just starting to come up. Okay, so if this pattern were to settle down in here, tighten up, and I would be looking for it right along that trend, out here someplace. It could be here, it could pop through and be over here. I still have plenty of room to the 200 to make money on that trade. We have to recognize this construction of the chart. The rounded bottom breakout is great. It is a great producing pattern, but I think what you're beginning to see is you have to put a little bit more thought into it. If you take a look at the 3/8 trap in here, notice in here with the 3/8 trap, this is one of your clues that there's a problem here still. The 3/8 trap, my rules requires that if it crosses over up, it must hold as support. So what this is showing us here, the 3 is crossing up, crossing down, crossing up, crossing down. Why is that? We're struggling with the momentum here in the chart. We need this pattern up here crossing up to now tighten up in here. Show us that that 3 is going to hold above the 8, and we're going to hold that trend. Then look for your trade. Is this helpful, guys? I know I go into a lot of detail on this stuff, but this is really, for me, the idea that a moving average cross or something like that's just not enough information. Okay, that is going to give you a potential trade. You need to look at the chart. You need to look at the price pattern. You need to look at the momentum in those positions to set things up and set them up correctly. When you speak about weekly patterns, if I were to jump over here and take a look, I am looking for some longer term charts all the time. Because I really like longer term charts. Take a look at SQ. SQ produced big in here, and I'm holding SQ as a longer term trade right now. And this is not a rounded bottom breakout in any way, shape, or form on the daily. Look at it on the weekly. Anybody like that chart? Anybody like the idea that if that were to rest or consolidate in here, produce a weekly signal in here, and that trade could go from 75 up to 120? Yeah, baby. That's where you really make serious money, life-changing money. And that rounded bottom breakout is the same here. An oversold condition, really choppy basing formation, and we're trying now to break that to the top side. Okay, so the rounded bottom breakout works just as good for weekly patterns. As a matter of fact, I can tell you some of the biggest profitable trades I've ever made, and I'm talking tens of thousands of dollars in a trade profit, have come from a weekly rounded bottom breakout pattern. Okay. Good question. Probably don't have the time to cover that completely here, but yes, I manage with covered calls. I close the covered calls, always close my covered calls prior to an earnings event, and then I buy puts on the trade that lock in a profit. So for example, if I've got let's say I've got $1,000 in profit on a trade like this, okay, and earnings are tomorrow, I'll go buy an out of the money option put, okay, that is going to lock in and say, because remember, when you buy a put, it gives you the right to sell the stock at that price. And the reason it's an out of the money is because I'm already got profit in the trade. So maybe I'm going to lock it off and say I'm going to guarantee myself at least $500 win on this trade. Okay. So I buy those puts. I wait for the event to occur. If I'm wrong and the stock doesn't pull back, if it shoots up, I lose money on my puts. It's kind of like buying insurance on your house or your car. I lose some money on the puts. But I'll go in first thing the next morning, close those puts, stop that loss off. I'll lose a little bit of money on that trade. And it could be substantial though on those puts if you really get a big, huge move. But usually if you go right in there first thing in the morning, close that trade, the implied volatility will have changed that much. You won't get hurt that bad on that position. And you just paid for some insurance for the event. And your delta on your long position overcomes the delta on your short position. So let's say I'm in my delta, because I bought it around 70, it's now up in the 80, 85 range on that trade. And I sell an out of the money option that has 30 deltas. Even though I'm losing money on my 30 delta option, I'm making money overall. Okay, so I protected the risk and managed that position through. Okay, and I hold trades. I have held trades for years. Okay, and I'm looking to pick up some more of these when the market gets beat down or stocks get beat down. These are some of my favorite trades. Yes, you can use leaps. Yep. Or remember, just because you're an option trader doesn't mean you can't buy stock. And oftentimes I will buy stock as well. Okay, because stock pays me dividends on stocks like that, things like that. Let's take a look at some more patterns that I really think could be coming along. 3M. Now, 3M is an old, boring company. One of the things you're going to notice about me is all of the hotshot stocks, probably not of interest to me. Too much volatility, too much risk in them. I don't care about them. Give me an old, boring stock that nobody's talking about, and I get great profits out of these, and I don't have to worry about all the volatility. Okay, so 3M. 3M, nice little pattern here. Notice our 50-day moving average is just starting to turn, pop and pull back. We're right in that range where we might be thinking about that rounded bottom breakout entry into that trade for 3M. Now, one concern that I have on this trade right now is this was the current trend, which is pretty flat. Okay, what it's trying to say is this is now the trend. Okay, and that might be the case, but just keep in mind, the steeper that trend goes, the less time it can usually be sustained. You know, straight up markets tend to fail and fail hard. So when we look at that trend, that's a pretty steep move. So don't be too surprised here if you pick up that trade that this resistance does its job and this has to rest some more and the actual trend is out here someplace. That's why you want to plan enough time on trades. Immediate gratification is, well, in this market, it's tough to even get 2 days in one direction anymore. Take a look at Etsy. Etsy is something I brought up to the members of Right Way Options yesterday. Etsy is starting to set up that pattern. We not only have this rounded bottom breakout pattern, we have this W formation, and we're struggling against that resistance, which we would normally do. We're struggling against that resistance. Notice that's giving time here for that 50-day moving average to try and turn. Okay, so I'll be watching and waiting for this price pattern in here to establish itself and looking for that move that pops out there on Etsy. I already mentioned Mosaic. This was the trade that we just took and took profits on. And I'll be watching this now for the next pattern entry. Any rest, consolidation, pullback that comes back in toward this trend, I'm looking for the next trade that occurs on that one. Take a look at like Tyson. Here's one of those great examples of this, of the 50-day moving average has been moving down, and we're just now getting a hint of a turn, just a hint. Tyson might be the one to watch here in the very near future. Nice little resistance area in here. Let's consolidate this a little bit more, 2 or 3 days of rest in here, and I'd be looking for that next opportunity for that to pop to the upside. Okay. Now, another way of finding rounded bottom breakouts, I get this question all the time other than just scans, is look for a sector. Now, when I look at XLU, obviously 200's above the 50. This isn't a rounded bottom breakout in XLU, but I know if I go to the XLU stocks, I'll bet you I can find a rounded bottom breakout. And the reason I know that is because I've already looked, and I know there are stocks in here that are setting up a rounded bottom breakout. So, for example, AES. AES in that utility sector, okay, we're popping up, pulling back. There's your rounding bottom starting to occur, 50 starting to curl up. Look for that next entry into that trade. So sometimes go into sectors that are rounding and coming up in that bottom, and you're going to find stocks, individual stocks that you can trade that are coming up in that sector. Okay, we all know that oil has been kind of beat down here recently. It's starting to turn back up. Take a look at APA. APA is in that sector that got kind of beat down, and there's your rounded bottom breakout. Take a look at OXY. Your rounded bottom breakout could be setting up in those trades. So look at those sectors that might be turning, and then look into those sectors to try and find stocks. Here's another utility, ES, that's setting up a potential rounded bottom breakout. And notice that we're sliding out here toward trend. The 50 hasn't turned yet. So what do? We set a price alert in here and we wait. We wait for the trade. Okay, don't know when it's going to occur, and I'm not going to tell you when it's going to occur because I don't know. I don't know that it won't even fail. It may fail. But I know that if I place an alert, I don't have to worry about this chart anymore, and I'm expecting that trade to occur somewhere in this little triangle. Rest in here, consolidate, pull back, whatever it needs to do, and then I'm looking for the entry. I'm not looking for the junk that's in here. There's an old statement out there. If you guys ever read a book years and years ago, Napoleon Hill was his name. It's a book called Think and Grow Rich. And one of the things that he pointed out is, gold miners. They move tons and tons of dirt and rock to find an ounce of gold. But they're not looking for the dirt, they're looking for the gold. Okay? Too much of the time, I think what we're trying to do as traders is we're trying to anticipate that there's going to be gold here just because we see a bunch of dirt that we like. Wait for the gold to show itself. Wait for that strike to happen. Don't play in the dirt. Wait for that trade to come. Okay. Here's another one in the oil sector, Devon, that's starting to set that pattern up. Notice that we're just now getting that 50-day to flatten and turn. Nice little morning star pattern here. If you caught that entry there, awesome. But it doesn't matter. We've got so much room up here, and we're dealing with this resistance. Who knows, the next trade may be right over here in that chart to follow through on that trend up in there. So watch these charts. Place alerts. Wait for the trade. There's a lot of these potential patterns setting up, and they're everywhere in the market. Here's one that's just crossing over. One of the things that happens all the time as I get questions like this, I'll get a note, is KDP a buy? Well, it's certainly a bullish chart, but there's no buy here. This is too stretched out. If you plan your trades at all, if I buy this here and my stop loss goes here, that's not a trade I want. Okay? But if I take the time to say, there's the trend, now give me that resting pattern in here that sets up that next opportunity, just like it did here. Shot up, rested back. Let's see if that happens here, and then I have a trade in KDP. Notice our 50-day moving average is flattening out. That little resting is coming in. Now, unfortunately, a lot of these charts that I'm showing you are probably going to be completely messed up by earnings. Earnings on the 27th. Always make sure you're paying attention to earnings when we're in the earnings season, because you can have a perfectly good pattern and get completely destroyed by the earnings event. So kind of keep that in mind. General Dynamics. General Dynamics, there's that pattern again. Notice that our 50-day, we've had this pop through here, and you could have bought this position here, and it really didn't go anywhere. That 50-day was still not turning. Now we've rested and pulled back. 50-day moving average is turning. Start watching for a potential entry in here into General Dynamics. Notice that this is right where we would expect it to be, near the trend. Make sense? I hope this is helpful to you guys, and if it's not, please ask some questions. Would love to help you with that. Gaps, whoops. Where's the gap? Oh, it's GPS. Sorry, GPS. Gap stores. Possible RBB setting up in here. Notice the time it took for this to flatten out. People will go, oh, the RBB, it's not valid here. Nope, it's not valid here. It's valid here. Okay, there's your potential trade. Notice how tight this pattern is right here. So what do? We're waiting for the trade, right? Somewhere about there is where I'd like to be notified that we're crossing up. So I set a price alert, and after that, I don't have to worry about it. Price alert on DNB going off again. Keeps crossing up and down through a alert I have on the chart. So there you go. There's your trend. Wait for the trade. Macy's. Macy's is setting up in an RBB, yeah. Good catch. There's your resistance area in the chart. Notice our 50 is just starting to turn. So you could set a price alert across here. What I would prefer to see, honestly, and that's what I always think, is what do I want to see? I want to see this rest and then pop out. Or I want to go ahead and let it pop out and then rest, and then I look for the entry into the trade. I want that trend out here somewhere to produce that trade. Moderna is maybe coming into an RBB, but it's not there yet. Carol, we looked at this one yesterday in Right Way. It's just now trying to cross up through that 50. So Moderna needs to push on through and then hold. Okay, following the trend. And then I'd be looking for that next entry into that trade. But yes, I think it is coming and should be on a list for those that like the RBB pattern. Now, before I go here really quick, I've got a couple more minutes. I want you guys to notice that the patterns that I've been talking about are absolutely copacetic with the 3/8 trap. The 3/8 trap it gives me that momentum of the market. So Macy's still struggling here just a little bit, 3 crossing up through the 8. We need to prove to hold that, or we need to pop out and then hold, and then I'd be looking at that trade. You can see GPS is almost the textbook perfect 3/8 trap that could be setting up. And I also want you to notice that I'm looking for the trade before the trade occurs. I'm not chasing white candles. Okay, I'm looking for the trade before it occurs. This doesn't have, the potential trade doesn't have anything to do with the round and bottom breakout. It just helps me find it. It doesn't have anything to do with the 3 and the 8. It just helps me find the trade pattern and the trade setup, and then I wait for the potential entry. Okay? So when you're looking at these charts, if you like the 3/8 trap, it plays into the hand of this perfectly. It doesn't require you to be anticipating or predicting. You're going to be waiting for that trade to occur. You want to make sure and notice the trend. You want to make sure and notice the oversold condition. You want to make sure that that 50-day is starting to round up. You want to start looking for that trade when that 3 holds above the 8 and sets up that next entry into the trade. Right? PFE. PFE failing along its 50-day moving average. This needs a lot of work yet. For the upside move. I mentioned Monster. The absolute opposite of this is the blue ice failure pattern. Gotta type the right symbol though. Oh, come on. Monster is a potential blue ice failure pattern coming. Same pattern here, just reversed. Break down below the 50, rally back. Notice the 50-day is starting to turn. If that starts to roll over, look for your failure pattern for the short trade down toward the 200-day moving average. VFC, yes, it is setting up. Yeah, got plenty of volume in there. So wait for this rest or pullback to occur. We want to see that 50-day moving average starting to turn. Your trend is out here, so we've got some time. There's no hurry. Wait for it. Wait for it. Well, AMD would be nowhere near an RBB, what we're talking about here, Miriam. AMD is a potential failure here at the 50, though, if you're thinking about a blue ice failure. This would have to fail, then rally back, and then fail. Okay. There's our downtrend. Follow the downtrend. Okay. Any other questions that I can help you with here? I better break away so you guys can stand up, stretch your legs, use the bathroom before John comes on. Thank you, CJ. I hope you guys got something out of this. And you can see there's a little bit of a different nuance on the way I look at things as the way Rick. It doesn't mean one's right and one's wrong. What's important is to find the way that works for you. And it may be completely different than what Rick does and I do. You might come up with another new nuance in there that makes that pattern even more viable for your trade. So kind of think about how you can improve on the trade. And that's what I always do. When I look at a price pattern, what can I do to make it better? What can I do to improve on this pattern? What's the nuance in here that I can take that edge that's always a very small edge and move it from 50-50 to 60-40 to 70-30. I want to win more trades than lose. So if I can find those little nuances in the pattern, that I can improve the win-loss ratio. Because remember, for me, it's not about chasing every trade in the market. I want just a few good trades. A few good trades is all I need to be very, very profitable in the market. I don't need everything. So it's those little details that eliminate those losses that makes a difference and helps me maintain my win-loss ratio on that higher level. Okay? So thank you much for listening. Hope you have a great afternoon. RWO folks, I will be back before the close today. Obviously, John's going to be up here finishing out this last hour, so I'll be back before the close today. Hope you got something out of this. And you guys might want to make some suggestions for the next e-learning session that we do, where we all three take something and work through the details of that to help you determine what your pattern is and if you like that or not. Take care, guys. Have a great one. Thank you much.